Alright, so gang, it's your boy Nature, aka Nature. You already know what time it is, man. Alright, so in this video we're gonna talk about uptrends, alright, and traded uptrends. And we was doing uptrends in the last video too, explaining uptrends, understanding uptrend, what is an uptrend. So is uptrend is when price is trending up. It's, the trend is up, it's uptrend. It's self-explanatory. So uptrend provides investors with opportunities to profit from rising asset prices. Selling an asset once it has failed to create a higher peak. So remember, higher highs and higher lows. And drought is one of the most effective ways to avoid larger losses that can result from a change in direction. So you want to sell, the best way to understand a sell is to sell at the highest peak. And we're going to talk about selling and downtrending soon, and when a drought is effective. So a drought means like prices is dropping down. Consider a pullback for selling is an asset. So you will sell if you will sell at a higher peak. Effective way to avoid losses that can result from a change in direction. So technically, traders use trend lines. I'm going to show you how to draw trend lines. Trend line is a line that you draw from the lowest point of the trend to the highest point of the trend. It's called a trend line to identify an uptrend or spot possible trend reversals. So you draw a trend line. Once the candlestick goes past your trend line, it's a possible trend reversal could be coming up. So that's just all types of ways, technical ways you can identify a trend. So you have to identify a trend. That's like one of the main things. Then put your indicators on there, moving average. Look at the day chart, the 4-hour chart. It's teaching you all that in the later videos when actually is live trading going on. I'm gonna start doing live trading soon. So the trade line is drawn along the rising swing low, which helps shows where future swing lows may form. So trend line draw from the swing low to the swing high. When it's going up, when it's going down, it draws from the swing high to the swing low. So moving average are also utilized by some technical traders to analyze uptrends. Moving average, when go over that, high moving average candles are above the moving average, is going up. Candles are below, it's going down. So when the price is above the moving average, the trend is considered up. But when the price drops below the moving average, it means that the price is now trending below the average price over a given period and may therefore no longer be trending on an uptrend. It may not. Sometimes you'll see price, it'll go below the moving average and then it'll go back up above the moving average. It may uh, signal that there's no longer an uptrend. But we have to also look at other candlesticks, other technical candlestick patterns, triple, single, and double candlestick patterns to also see if it's going in that direction. So very explanatory. We already ran over double candlestick patterns, triple, and single. So while these tools may be helpful in visually seeing the uptrend, ultimately the price should be making higher swing highs and higher swing lows to confirm that an uptrend is present. So the uptrend is not making higher highs and higher swing lows, which I showed y'all examples of an uptrend. It's not considered an uptrend. Same thing, it must be making higher lows and lower lows. On a downtrend, it has to make higher lows and lower lows. So when the asset fails to produce higher highs and higher lows, it means that that downtrend could be underway if it fails to produce that. So you see it a market and you see it's not making higher highs and higher lows, and it's more choppy and rangy, and price action is choppy and really considered consolidating, which means it's just going sideways. It's not really doing nothing. A trend is either up or down. If it's going sideways or choppy, then price action, that trend is just going sideways. We don't trade on choppy or rangy or a sideways trend. That's how you lose your money. Okay, so we only trade when the trend is going up in the direction, and when the trend is going down in a direction. So trend direction is sometimes hard to determine. That's why we have all other technical indicators such as such as trend lines, moving average, Fibonacci, um, all types of other indicators too. The RSI, the resistance SI, I use that too, which is like 70 to 30 RSI. You'll see it on MetaTrader. 70 means it's going up, 30 means it's going down. So we look at all these technical indicators, and none of them are 100%, but they're good. We use all these to determine what direction the trend is going. So in such cases, the uptrend trader may opt to set aside until he sees the uptrend that is clearly visible. So until he sees candlesticks, long candlesticks that are going up, a green candle or white candlestick that's going up, that's when he's going to enter. Most traders, they wait till the trend is clearly visible and there's no way in doubt that it's not going up. That's when you will enter. So trading uptrend, there are many techniques for analyzing and trading the uptrend. Looking only at price action is one way. Okay, I'm gonna show you how to look at price action. Price action is easy. The price action is resistance, and price action is the support. So the price action is resistance to be the highest price action it went to before it went back down, to the lowest point it went before it went back up to the highest point. So price action helps us also. I use a lot of price action. All technical traders use price action. Price action is actually one of the ways that you really don't have to use technical indicators like that. I usually use price action, moving average. Have to identify the trend if it's going up or down, and that's pretty about it. Fibonacci and trend lines is cool too, but I really just go off of price action. Like I said, I've been in this market for about almost a year now, so I want to show you guys what price action is, and how you can utilize off of that. So using your tools, use price action is one way, while using your tools and trend lines and technical indicators are another. So like I said, they said it right here. You don't even have to use trend lines and technical indicators if you really understand price action, which I'm going to explain to y'all what price action is. You know what I'm saying? So y'all can make y'all money and do what y'all gotta do in life. So 2 common price action trading strategies which can be confirmed and validated with additional inputs from technical tools and indicators are to buy when price pulls back during an uptrend, or to buy when price is attempting to make a new swing high. There's 2 ways you understand price without really looking at the technical indicators. It's just to wait for price to pull back during the uptrend, or to buy when price is attempting to make a new swing high. So even as price rises, it will oscillate up and then down. It will go up and down, and then move lowers. The move lowers are called pullbacks. Okay, so if it starts to move lower, it's called a pullback. For a major uptrend, for a major, going back up. So but they're always going to pull back. Price will always pull back, and if you get it when it's a pullback, then you have a higher chance of receiving profit and gaining a lot of money. So if a trader is investor believes that price will continue higher after the pullback, they can buy during the pullback and profit from the ensuring price rise if it comes. So if it's the pullback, the market is not it's not gonna, even though we have all these technical indicators and we have all these tools and everything, market still is going to do whatever it wants to do. So it might not continue after a pullback. That's why we have to look at candlestick patterns to make some more bulls with candlestick, which is a white candlestick or a green candlestick after a pullback. If you see a Merbozu candlestick at the end of a downtrend, at the end of a trend, especially of an uptrend, you see a white or green Merbozu candle at the end of an uptrend, it's a continuation coming on. If you see it at the end of a downtrend, it's a reversal coming on, which we already went over. So we have to put all these technical indicators, everything that I taught y'all from candlesticks to everything. You have to put it all together to make to come up with this trade so you can make money. So it's very important we put everything together. We look at everything. We look at everything, price action. We look at everything to see where we can possibly get a trade at, and so we can profit and make money. So the price will continue higher after the pullback. If it does, then obviously if it continue higher and you get in when that pullback, when price pulls back, you will profit. You will profit from that. The price will rise if it comes. Like, it might not happen. Sometimes price will reverse, and you have to be ready for that too. Price reverse, okay, you get in on a sell. So trend traders buying during a pullback as too risky or time consuming, since there is uncertainty as whether the price will rise again and when. So these traders may prefer to wait for the price to be definitely rising again. This means they may end up buying near the prior swing high or when the asset pushes into a new higher territory. Okay. So some traders don't like to trade on the pullbacks because the market does what it wants to do. So some traders will wait and prefer to wait for price to be definitely rising again. Because pullback can also mean a reversal in a new trend direction. So I get why they do that, but these are all the things about an uptrend that you should know. It's going to pull back, and some traders might prefer to wait until price definitely rises again, and then that means that they may not buy during the pullback. They're going to buy when prices actually see price rising up again. Both strategies, or when price hits a new resistance level, okay, or a new support level. I'll be explaining that too, with resistance and support levels are. Explaining my pairs and all that too. But both strategies require specific entry criteria to enter a trade. You have to put everything together, like I said. So traders buying during a pullback may look to buy only if price is near anticipated support. So price is going to pull back to the support level. It's always going to pull back to the anticipated support level. Okay, this is why we got to understand price action and understand what price wants to actually pull back to. So I'm going to show y'all about price action. So most traders know that price is going to pull back to anticipated support level, and then like rising a trend line or a moving average or Fibonacci retracement level. You can use these things to also help you. They may also wait for the selling or the pullback to slow. To wait for that pullback to slow down, or for the selling to slow down, because pulling back, that means sellers are in and they're pulling price back. So they'll wait for some type of confirmation that sellers are finishing up and buyers are starting to overpower them. And once they get that confirmation from some type of bullish confirmation, or engulfing bullish pattern, or some type of inverted head and shoulders, or some type of triple stick pattern, what we got, inside up pattern, then we can see, or the triple, like the white soldiers, 3 white soldiers, or 3 green soldiers, some type of confirmation, which you usually see all these type of triple, double candlestick patterns, single candlestick patterns at the end of a trend, which will let you know if price is you'll see some type of confirmation to let you know that price is starting to pull back up, and buyers are starting to overpower. So you just have to look at the candlestick patterns, study the candlestick patterns that we went over, that y'all have, study them, and so you'll understand. All right, so you'll see this usually at the end of a trend though. So at the end of a pullback. All right, so traders that buy near prior highs because they want to see the prices move higher again may decide to only enter once price moves above a short-term resistance level. So yeah, short-term resistance levels, price will go back to a resistance level. So it'll go up and down. So it'll make a short-term resistance level. It's not a long-term resistance level. It's a short-term resistance level, meaning that price is going to go by that resistance level to a whole another a new level of resistance. And so some traders will wait for that. They'll wait for price to move back up to that last resistance level it was at before considering to actually buy. That's more the conservative way. Like conservative way is to actually wait for some type of confirmation. I told you it's aggressive way to trade and a conservative way to trade. So a conservative way would be to actually wait for some type of actual real signal that price is actually going in that direction and then they get in. So ultimately, they may wait for price to move to a new high on a big volume jump or for a technical indicator to flash a buy signal. So the risk is to put your stop loss below the last swing low to the and this is typically placed below the recent swing low since the traders is expecting price to move higher. So this is everything you know about uptrend. Ways to exit a profitable trade are plentiful. This could include when price takes a lower swing low. You start to see price starting to make a lower swing low. There also are a lot of technical indicators, bearish candlesticks, bearish engulfing candlesticks. We have dojis you can learn about. You got three inside down candlesticks, head and shoulders, inverted head and shoulder candlestick and head and shoulder candlesticks. Head and shoulder candlestick, the one that's bearish. It's a bullish to bearish candlestick pattern. It's a triple stick candlestick pattern. So you might see these patterns. That's why you have to put it all together on top of drawing a trend line if you need it, or a moving average. If you see a trend line is broken, or you see the moving average is broken, you see the price go below the moving average or that trend line that you made, then definitely that you put your trailing stop loss above that last high before price made that bullish, that bearish, that reversal, that trend reversal pattern, which is going down. It was some type of trend line broken or some type of movement average was broken. So trailing stop loss is hit. So example of analyzing and trading an uptrend. The following Facebook chart show numerous examples of potential trades using support and penetration of resistance on increasing volume as the moving average been added to aid in the final possible support area. Several longs have been highlighted with arrows that show a break of resistance and an increase in volume. The price consolidated while an overall uptrend and broke higher. So price consolidated, all right, and then overall the uptrend it broke higher. So it's still an uptrend overall. So price will consolidate. Sometimes we'll pull back. We'll do a lot of things. Okay, so you have to understand, actually what's going on. Understand how to actually read candlestick patterns, price action, trend line, move average. So waiting for the volume to increase was important. Otherwise, it was a possible trade that would have been entered too early or not at ideal time at all. So that's another thing I'll be doing. I'll be entering when time is not even supposed to trade, and I'll be entering on times when it's too early. You begin in a trade that's too early. You're not even supposed to get in that trade. It's not even time to trade. You begin that trade entering too early. So don't do that. Don't enter a trade too early. Stick to the time. I'm explaining all the time in another video the time to trade each pair that I trade personally. And so you have an idea of time of when to trade. Okay? So you don't want to enter the trade because you think it's going up. And it's not going up. Alright, you want to actually wait for some type of more confirmation. You want to actually wait for the actual time to trade. Don't enter a trade early and don't trade when it's not the time. Alright, so small green arrows that are not linked to the volume increase. Small green arrows that are not linked to volume increases are few of potential trades that occur during the pullback or near support. In these cases, traders are marked where the price fell briefly below the moving average but then starts to climb back up. There are many strategies that can be associated with the uptrends. These are generally entry strategies for discriminated purposes only. Alright, so you have to have an entry strategy. Alright, I'm going to talk about that. This is actually psychology right here to help you y'all. You know, 'cause you have to have a strategy. You have to have an entry strategy. You have to have an exit strategy. Okay. So price making overall higher highs and higher lows. You can see. Um. So boom. You could see that it made a higher high right here. This high is higher than that high. Then it could buy near the pullback. The pullback. You know, back down to the support level before on the next candle, as you can see, as price then pushes back above the resistance level again, makes a new resistance level, and then it pulls back again to a downtrend, which if this one go up, it'll pull back, you know, make some lower lows, make some lower highs, you know, and then it will continue to go up, you know, into an uptrend again. So this is on an uptrend. This is all still considered an uptrend. But sometimes on the uptrend, you'll have pullbacks, you'll have, you know, change in direction. It'll look like it's going down. But you have to look at the overall trend, which you look on a day and the 4 hours to this high, if this is going up or down. So I just wanted to show y'all an example of what price will do, pull back like that, or pull all the way back. And you'll think it's going as a downtrend, but you have to look at the overall. And obviously the overall trend is uptrend. But you know, if pull back, price won't just go all the way up. It'll have to pull back. So the small green arrows that are linked to the volume increase are fewer potential trades that occur during pullback or near support, or pull back to the nearest support level. In these cases, trades are marked where price fell briefly below the moving average, but then starts to climb again. Alright, so let me show y'all the moving average on here, because I can. Alright, so the moving average on here is this line. You see this line right here? Let me show y'all my moving average and the lines I use and the levels I use, so you can have my moving average. But this is a moving average. It's this line right here, the yellow line. And when the candles are above the moving average, so you can see all the candles are above this moving average, above the line, it's an uptrend. But then you can see right here when it says downtrend, lower lows and lower highs, you can see that the candles went below the moving average. So when it goes below the moving average, it's going down. But if the candlesticks are above the moving average, above the line, the yellow line, then it's going up. So that's how another way, like that we decide, we know if it's going up or down by looking at the moving average and seeing if the candles are above or below the moving average. If it's above the candlesticks are above the moving average, it's going up. Candlesticks cross over below the moving average, is going down, and a reversal into a downtrend is possible. Right here, as you can see right here, boom, moving average went down, continuing, you know, a reversal into a downtrend is happening. That's how you read that. Alright, boom. So this is an uptrend. Just wanted y'all to know how to actually trade an uptrend. So you want to look at the moving average. When price is going to pull back, price will always pull back to the nearest support. In these cases, trades are marked where price fell briefly below the moving average, but then starts to climb up again. There are many strategies that can be associated with an uptrend. So these are generally the entry strategies for demonstration purposes only. When price was in a downtrend, trades were avoided. Some traders only trade on uptrends. You know, some traders only trade on downtrends. I like to trade on both. You know what I'm saying? But everybody's different. This is really an uptrend. I'll talk more and more about it. Alright, so, alright, guys. Next video, we're going to be